Hi, this is Dylan from The Lifestyle Trader, and today is 21st of November 2016. Time is about 2:49 p.m. in Singapore, and welcome to my D 10 minutes trade idea video. All right, so today, what I have right here, in fact, I have executed a trade on the pound against the US dollar to buy, and I bought with half risk because firstly, is the opening. The market has just opened on Monday, and before 6 p.m. Based on my trading rule, any trading idea that I've saw or trading opportunity I've saw before that hour, I will go at half a risk rather than my usual risk. But anyway, let's talk about pound against the US dollar. So in the 4 hourly chart, I have seen that the price has reached the bottom of a support zone. I consider this a key support zone. All right, now it is supported at 1.2320 and is beginning to rebound off if you look into the smaller time frame 15-minute charts. Now what's more interesting is that in the 1 hourly chart we can see that there is a crab pattern that was formed nicely, and it got supported, or rather the crab has been completed at Fibonacci retracement level of 161.8%, and the first rebound has happened. And in the 50-minute charts, the price is now just consolidating. So I just look for the price, a better price to buy, and setting my stop loss 20 pips below the 161.8% retracement level, because if it can goes all the way down to this level, then it most likely shows that the price is breaking below the support zone. Then this trade will be invalid, and of course I'll incur the loss. So that's for the pound against the US dollar. If you are interested to look for a trade today. So that's pound against US dollar. Next, quickly talk about euro against Japanese yen. Since last week, I've been talking about a butterfly that's forming right here because the price has reached the major resistance zone. However, I do see that the price may continue to appreciate further, and all the way to the to the Fibonacci retracement level of 161.8% based on the butterfly pattern, and all the way to the top of the major resistance zone. All right, so this is what I'm looking for. Most likely I won't be entering a trade for this until it reaches this level, because the yen just seems to be weakening pretty much ever since US election, and dollar just still seems to be strengthening. But of course, I do believe at some point there will be a major correction towards the rally. So that's for Euro yen for you, and yep, I'll just be waiting. Most likely, just look at the 1 hourly chart. It is still not, we still haven't really seen any kind of prominent exhaustion happening right here. Although the price is now sitting at 127.2, but yeah, I'll be waiting for it to reach 161.8%. So next, we have the Kiwi against the US dollar. Very interestingly, in the day one charts, we have a rising channel, a major one, and the price is now at the bottom of the major support zone. So I have been calling for sell in this region. So finally, it has reached the major support zone at the bottom of the major rising channel. So therefore, I will be looking for the buy opportunity, expecting there will be some major exhaustion, retracement, or even a reversal to happen right here. So into the 1 hourly chart, or rather the 15-minute chart, we have seen that a crab pattern has formed as well. All right, a little bit awkward for this portion, but it is still a perfect crab. End of the day, price was supported at the bottom of the support zone, and rebounded off as the crab completed at retracement level of 127.2%, and yes, retraced pretty significantly. Now it's climbing back again, and we can see that there is a very a minor inverse head and shoulder that's forming right here. So I'm expecting the price to appreciate further, at least till make another wave of appreciation like that. So that's pretty much this level. Then that's where I have to be careful and see if the price can continue to appreciate further from here, or maybe it can form another inverse head and shoulder right here in the 1 hourly chart. That's just some of the possibility. But if you were to enter right now, setting a stop loss below 1 to 7.2%, I would say that all the way to 1 to 7.8%. And whatever that's forming right here, if it's an inverse head and shoulder, then you should be safe even if it comes all the way down back to this level. All right, so either you are looking to buy right now, or you can wait for another retracement to this level. With Fibonacci retracement, that would be somewhere at it's close to 100. I think 88.6% is the best price to buy. But however, with this inverse in the shoulder pattern, I do expect that the price may continue to appreciate further very soon. All right, so that is for the Kiwi against the US dollar. And let's talk about dollar against the Japanese yen. All right, a pair that has been rallying since the US election, gaining so much that it finally has reached break above the psychological level 110. Now it's 111, and into the major resistance zone. So into the smaller time frame, 15-minute chart, I was also looking for a butterfly to form, but I think this is a little bit too much of consolidation and it's kind of overstretched for the second triangle to form. So I don't think I will want to take this pattern anymore, or rather I will be looking for another butterfly, or rather for the initial reversal to form first. Maybe from here, if you can fall somewhere here, then you retrace all the way to the top of the major resistance zone. I think that will be that makes more sense to me. All right, I'm definitely looking for a major exhaustion for the dollar against Japanese yen, since it has rallied so much. And but got to be very careful, because we can see that dollar is still very strong, strengthening a lot. Yen somehow just seems to be very weak against other currency pairs, other currencies as well. So let's observe a little bit more and not make any harsh decision right here. So next, maybe let's talk a little bit about dollar against Canadian dollar. Now, dollar against Canadian dollar has been appreciating. Yes, broke above a lot of resistance level. Right now it's at the level that is most likely to continue to appreciate till the next support and resistance zone at 1.3664. That's what I see. And one hourly chart, this appreciation here has break above the previous swing high right here. So it does shows that the price can continue to appreciate further. And in the 15-minute charts, we have seen that the price is making a very significant retracement right here. You can take this as the first retracement. All right, somewhere from here, back to the same level, come up, start to fall. So we'll start to look for the second retracement from this point onwards all the way to the retracement level of 70.6% to look for the buy gain for the dollar against the Canadian dollar. All right, so that is for dollar against the Canadian dollar. And well, today let's just look at these few currency pairs, and we're going to see what's going to happen next throughout the week. Today is still Monday. We would really like to see if the dollar will still continue to strengthen, or is it time for it to hit a major exhaustion and start to take a major reversal or major retracement. But definitely there will be a trading opportunity for us to go into. So we'll be looking for much more of a reversal pattern, the butterflies, the crabs. And for currency pair like dollar against the Canadian dollar, if I still see there's a chance for it to go up higher, like in this case, then of course I'll be using retracement channel to look for continuation of a appreciation for the dollar. All right, so that's all for today. Thank you so much for watching, and I'll see you again tomorrow.